How's it going, everyone? Welcome back to the show. Today, we've got Craig McGrouther, who is over at LSCRE's amazing team. I actually just spent time with them over the weekend. We had kind of a fun manager event where we co-hosted an event and got to see some total rock stars inside of our world and outside because we both brought different people. And it was awesome. First of all, Craig, it was good to see you, man. Welcome to the program.
Thank you. Always a pleasure to get FaceTime with you and Tyler. Great to see the wife as well. Your wife, of course. So great to see all parties there and really to share a lot of great information and figure out how we can navigate these market times together.
Totally. And the reason we decided to co-host this event was that we in our different firms just have a very similar perspective on certain things, how this business should be conducted, fee structures, how marketing should be incorporated into these businesses. And there's some people that are just out of whack. And I think that you and I both are super aligned. And we took the opportunity to really reset the baseline of what we think this industry should feel like and sound like, and just basically how people in operating real estate businesses should execute on the promises they make to their investors. And I think your firm, LSCRE, from an operational standpoint, culture standpoint, speed of response standpoint, you guys are just super buttoned up. And I do feel like you hold your brand in a high standard. So it was very much an honor to be, able to co-host that event with you. So first of all, thank you. And the whole LSCRE team. I just want to start out by doing that. It was an awesome event. If you ever get invited to one of our events, especially if these guys co-host, you should come. Any
Yeah,
thoughts on that
well,
before we keep rocking?
Yeah, we'll just ditto to that. I want to harp on that. And the word you said is alignment. We look at the world very similarly, as you and ASIM Capital with Tyler over there. So it meant a lot to do with a group that was local, as well as people who are just seasoned, professional, and you guys have been doing this for a long time. So just like us, we've been doing it. I mean, you talked about your stories from raising from 2014 and stuff like that all the way to now, which is remarkable to be in a decade of space like this where there can be a little bit of a fluctuation of people kind of coming and going. The revolving door of figures in the space is a very fluid thing, but just really appreciative for that opportunity. And hopefully, we'll do many more events like this in the future with you guys and just providing a lot of value and kind of creating the culture in the industry that we want to have throughout and educate people, but also to share the secret sauce and kind of open up the curtain a bit. So it was fun to do that with everyone, and the feedback was overwhelmingly positive.
Totally. Speaking of doing the right thing. So the market obviously changed dramatically in 2022, wiped out a lot of operators. Also, there's people that, and clearly Tyler and I just got off a meeting without getting into too much detail. When you realize you're not going to hit the promote on a deal, there are groups that totally just bail, essentially, emotionally, financially. They just quit because if they're not going to hit the promote, they're not going to make any money. So they just move on. And then it just becomes a question of, can we sell this property for the loan balance or are we going to go through a short sale? And I'm seeing it happen right now in some of these deals. But LSCRE is number one, not going through that at all. But number two, you guys are scaling when these firms are challenged. And one example of this is that you recently took down a $61.5 million deal. And this is on the tail of just buying another $20 million deal. And I know you closed $80 million just in one quarter, just from those two deals. And not asterisk, whatever the opposite of an asterisk is. And after on the tail of basically doing no acquisitions for, I think, half a year.
Yeah.
Is that right?
Yeah, no,
So
that's
you're a
right.
very measured firm, but when it's time to crank up the machine and take down deals that actually meet your criteria, you've got this investor base that's eager to fund you to the tune of multiple eight figures. That is just what I just said. There's so much embedded in that in terms of all the hard work you've done, both the patience while building up the org chart to execute something like this. I know I'm talking a lot. I'm just super excited for you guys because when you buy those kinds of deals in this kind of market, going to be a very exciting 2031. So let's talk about it because I want anyone, especially in multifamily, to be able to execute this. How did you guys just buy a $61 million deal in a deflated market?
Yeah, well, first off, it's kind of funny when you are in the market right now in the space. It feels easier from the outside than it ever is on the inside. So we feel very fortunate though that we've worked really hard and put kind of the work in each day. I mean, kind of think about this. You just chip away one person at a time, one capital partner, one investor at the time. And, it's a symbiotic machine and system that I have here. And it's not just me, it's the marketing teams, it's people like Dasha and Rob who are really, coordinating so many incredible things. Then from, on-site managers and having good success in the local area for us to be able to do this is super crucial. But, a deal like this doesn't really fall into our lap unless we've kind of been doing the thing for the last couple of years. Because as we know right now, when you're looking at a couple of offers in the marketplace, it might not be the highest offer that's taken, but it's the best offer from the best buyer. And we've been very fortunate, particularly with one of our niches of the markets where it was in Houston. We've been looking for deals in Dallas, Houston, and San Antonio, right? But our biggest bulk is in Houston. We found that to be actually the best and most compelling market from a fundamentals perspective. But we were very fortunate to buy Preserva Copper Springs, the $61.5 million deal that you alluded to. We actually own the property legitimately a mile down the street, which is our top performing asset. So we didn't have to take a lot of risk from buying this deal, but we got really fortunate on a multitude of things. Number one, we locked this deal up in January or maybe even November of 2025. And it's funny, we all know that if you're going to close the deal in Q1, it's because you locked up the deal in Q4. So we were kind of looking during a time that might have been a little bit quieter for other people. But we also had the conviction that we could kind of market and, raise the opportunity because you can have a great deal, but if there's not a story or a reason or rhyme behind it, it makes it a lot more challenging. But due to the fact that we were able to get this deal from a discount from not even the top dollar mark from the seller, due to buying for them for the fourth time on this deal was crucial. But from an investor perspective, right, from acquiring, doing another deal, it's a lot easier to sell to people and not convince, but show them the route from actuals from places that you own on the street. So we own two properties on this road, or three properties with this one, but one up the street and one down the street from here. And the investors had an appetite for that because there was less risk associated to it. And when you buy from the same owner from a top performing asset, our model and our business plan is very simple. It's pretty copy and paste, but it still had, pretty measurable returns there that were exciting. So for a multitude of reasons, we got lucky, and we also got particularly lucky here because we rate locked this deal. I think on the last Friday of February, and for those who are historical trackers, that was right before the bombing in Iran happened. So it's terrible when there's anything like that going on. But what also happened is we rate locked that day over the weekend. Treasuries and on Monday spiked up 50 basis points. So we were able to get a 4.93% interest rate locked in on that deal on a 7-year term with 5 years in interest only, with Freddie Mac as the borrower there who we borrowed from. So we got very fortunate that if we didn't lock then, our underwriting and our deal would look a little bit different. We're talking about maybe a 5.3% with buy downs as opposed to a 4.93% rate. And we initially underwrote a 5.3% on that. And I want people to really, if you take anything away from this, just know that when you do buy these deals, when you win, it can feel a bit thin. Ultimately, you're either, if you're not the highest paying buyer, you're really close to it, right? And we were kind of close to it. But even if we paid the most, paid less, if your debt moves on you that much, that deal, goes from really great to ugh. So we just got really fortunate. But, when you work with a team like us, I have to say, to brag a little, we got fortunate luck, but we kind of knew what we were doing. We were close there. And when you kind of see that and you're close to the closing there, you really want to make sure you capitalize and the whole team is buttoned up. So I can say how great I am at raising capital and that I walk on water on that front. I like to think that I'm okay at it. I'm just lucky enough to be in a great team and system, but it's the whole team that really created that win from us having conviction on the front end to lock up the deal. And then Brad, who's our director of acquisitions, who's overseeing the debt side of things, being smart and wise and tracking this and say we're locking today. And as we all know in the space or should know, once you lock, there ain't no getting back out of that. And if you don't close on that, you completely rupture your relationship with the national agencies like Freddie and Fannie. So needless to say, we got quite lucky, but I think we also made some luck on our own side here.
Well, yeah. I mean, the one thing that you just mentioned that I'm going to actually talk to Tyler about is if you're watching this and you're seeing these firms go from struggling to get their first deal to putting one under contract, and then maybe you're listening to this and you've raised $1 million or $5 million, and you're just like seeing a group like this take down, basically what your long-term portfolio goal is, right? You want to own
Right.
$100 million worth of deals. They did it in 1 quarter with 2 deals. It's because of the compound effect of doing what you say you're going to do. And if you just stay in the game and continue to do that, you will have results like this because almost no one does that. Almost no one actually executes on what they promise. The critical piece that I'm going to share with Tyler is they just bought this deal for a buyer they'd bought three other assets from. That is so powerful that they will go with you, even if you're literally millions of dollars below what the highest bidder is because of the confidence of close. Let me ask you this. Did you have a previous close with the broker that was involved?
Yes.
Ballpark, how many have you closed with the broker?
So that with that particular broker, we have done, I think now about $300 million of transactions with them historically.
See, so think about like this. The number one person that has the ear of the seller is the broker. That's the
Hmm.
person that literally all they care about is confidence of close. They don't really care so much about if you know what you're doing or operations. They care about if you can close.
You want to
And
treat it like
so,
magic, right? Like the best magic trick, it just happens, right? It's like all of a sudden the rabbit's out of the hat, right? Where we all know internally there's a lot of mechanisms and mechanics going on it, but you want it to feel like all of a sudden snap the finger, oh, the money's just there, right? So
yes.
if you can not, and it's not an illusion, but if you can create that process where it's fluid, you get a lot more say so and fortunate circumstances when it comes to offer selection time.
Yes, and you got to balance that with being open and transparent when all hell is breaking loose. There's a certain level of hell that's breaking loose that you have to notify the broker. I've
Yeah.
definitely been there. And you don't want to be like wait until the last minute, but like this balancing act is what all these private equity companies do. But getting back to kind of my point with the broker. So the broker knows these guys can close. They've got $300 million with him. He's going to go to fight for them when he goes to the seller. And the seller is also going to be interested in listening because some of that 300 million might have been from that exact seller. So just stick with it because if you continue to deliver on your promises, this stuff will really, really, really work. And those relationships you've taken a long time to curate, this is when it starts to pay off. So give me a breakdown of the capital raise side of things. What was the total equity requirement ballpark? Can you give me a guess of how
Yeah.
many investors were involved, any other capital outside money, 1031, et cetera?
Sure, yeah, absolutely. So happy to fully unveil the curtain. So we did about 70% loan to value on this one. Since we actually had debt come in substantially better than we initially anticipated from that 5.3% to that 4.93%, the raise went from about 27.5 million to about $25 million on the dot. So we're not the biggest fans of maxing out leverage, but we did feel it was still a wise choice. And we still got that 5 years of interest only, which, lenders aren't in this business to be friendly with people. They're in it to make money and to kind of hit their downside. And we're able to get that there, which was fortunate. So that latter amount was debt. The all amount of it, we make these things really simple, Hunter. We've got, different share classes, but there's no one just doing, kind of a private credit or a pref piece and then equity appreciation. It's debt and then common equity. And then we raised about 25 million of common equity for that deal. I want to say it was about 77 of our own investors in the deal. And then we had several fund managers, which I'm very fortunate to be a part of the RaiseMasters community and ecosystem because, of course, we had a ton of fund managers that came from your ecosystem that raised for this deal. One actually, I'll go nameless, but him and his group raised 6 million plus for the deal, which was
Damn,
fabulous. So we
that's
had,
awesome.
on our end, I think we raised about 11 million internally and then outsourced the other, call it 14 million from our incredible third party fund managers. So had a really great experience with that there. And then on the 1031 side of things, we had three 1031s come into the deal. Unfortunately, one did not close, not on our end, because on their end, the seller actually couldn't close. It got delayed, so we had to kind of backfill that amount, which we've got a very nominal amount of space that we're filling there at the moment. So it's enough where new investors who I meet today or tomorrow can get access into the deal, if you will. But yeah, we just feel very grateful and fortunate because, as I said, Although we are fortunate where we have a solid track record, the deal kind of sells itself. There's not a lot of bells and whistles. It's funny, I got asked on this deal, what's your favorite part about the deal and what's the worst part about the deal? And ironically, my favorite thing is that it was simple and boring. And the thing, that might deter some investors is that it's not going to be some 2x, 3x your money in a 2-year deal thing, right? So that's maybe the potential downside of it, but that's not really the profile of deal or investor that we're looking for regardless. But all in all, felt very grateful for the outcome on that one.
Yeah, and it's really just a matter of compounding as well. I know that a lot of those investors were repeat investors, is one example, but, and this is a good way to kind of give you guys context here, the work that they've put in terms of like buying deals from the same brokers, buying deals from the same sellers, nurturing those relationships in the interim between deals, maybe reaching out to the seller proactively. Hey, you thinking about selling that one that we've been keeping our eye on? No, not selling it right now. Okay, 6 months, reach out again. They've been doing the same thing for these fund of funds managers as well. And so when you hear, whoa, $6 million from one fund manager, yeah, because they've been putting in this work the whole time. And people sometimes hear, well, how long did he have to work? Was it 2 months? Was it 6 years? Because if it's 6 years and it was only 6 million over 6 years, then it's not worth it. Hold up. What Craig is talking about and what LSCRE is doing is that the time per dollar raised and time of labor per outcome is just really, really in their favor because those things are very high leverage activities. Meaning, the reason we did an event that was free for these very people is to curate relationships and create new ones. And so now you're starting to see like this is what happens if you execute on your promises, join a community that actually is filled with people that are extremely high leverage relationships and just continue to do good business. And so like, again, I know that behind the scenes, dude, this is not easy. Millions of dollars at stake, earnest money, you got 1031 money bouncing out the last minute. I know what that meeting must have been like. I know you guys. It's a holy crap, what are we going to do type of scenario, but you just make it seem smooth. And so it's important for people to listen. A, it's totally possible. B, it's going to be hell on earth. But if you stick with it, you'll have these crazy results. What are your thoughts on that, Craig?
Everything you said is 100% true. And it just kind of goes back to the fact that are you looking to make $1 today or 1 million tomorrow? I'm looking to make 1 million tomorrow. That's obviously just, being a little bit dramatic, but you understand the thought there is that we really, and just like you and Tyler do at ASIM, we view every relationship as a long-term relationship. And we don't care if you want to work with us after 2 weeks or 4 years. I mean, there's still people that we're at our event that we haven't worked with yet, but we've known them for 4 or 5 years. But we know over the course of time, if we just stay in the pocket, we're very likely to land their business, assuming there's a fit for both parties there in the future. But everything will get easier with time. And, it's kind of one of those things where if you're a fund manager, you probably want to work with the groups that have been there for long, that have been in the business, whether, you're directly operating like yourself or just been in it for a long enough time because you get experience. Experience is real. And you might be laughing about me talking about experience, considering I'm a 31-year-old with a baby face, but our team does have experience. Now we're kind of, some of the more senior folks there, coupled with obviously a lot of key personnel on our team who is a little more seasoned, if you will. That's a diplomatic term for, older than 45. But having said that, every day should get incrementally easier. And I think people really undervalue and underestimate how long it takes to build trust and also underrate the timing factor, right? There's a lot of people that we're going to work with where, hey, we sent the email a week late and they already, chose a deal, but they would have worked with us on that one. And we get it. And also just got to realize that, you're at the beholder of their time. They're working with you on your time, on their time, and you just have to appreciate that. And also know if you're someone who's raising money, talking to sponsors here, realize that it's a very competitive landscape and they might have a couple good relationships and it might be a risk for them to send your deal to call it their investors, right? Because at the end of the day, if you are a fund manager, you're beholden to that sponsor. So we know that we need to build trust over time, and it's kind of that 7-Eleven strategy where seven seven meetings or seven something at 11 different whatever, but you just got to get in front of these people in multiple rooms and spend time with these individuals because you might actually learn that if you're a sponsor with things going, actually, I don't want to work with that individual, or actually, I don't think there's alignment here, and that's totally cool. So, I think the biggest thing is to chip away at your goals day in and day out, and things are going to take time. Like if you're getting this business today and you think you're going to get to a $500 million portfolio in 3 years, you have the wrong mindset. The mindset you should want to be thinking about is doing a good deal and doing the right thing every single time, and then scaling up from that foundation.
Yeah, I got to close it up in a second, but I actually, one of our members, he's not going to have a problem with me. I asked him if I could share this. One of our members, Shirag, who's actually there, raised $10 million in 18 minutes with his group. And I showed this to someone that was thinking about joining RaiseMasters. And he said, wait a minute, but like, how long has he been working on this? And I was like, hey, bro, what if my answer to that was 10 years? Would it still be worth it? Like, because like right now, I was talking to someone that's like raised like, 500 grand in their career. And he's like, whoa, you're trying to scam me. It's making this guy just raised 10 million in 18 minutes. I'm like, it's probably been like 2.5 years, but like, what if it was 10? Still be like this crazy result.
It
So
would still be worth it. That's the
heck
moral of the
yeah, it would.
story. Yeah. And
Totally.
also, it's like,
Craig,
yes, yeah,
no, sorry to cut you off, but I have to run because I have a back-to-back call.
no
But
problem.
you're the man. Where can people learn more about your business,
Yeah.
LSCRE, find out about this deal, the next deal, etc.?
Yeah. Go to LinkedIn, go to our website, lscre.com, add me on LinkedIn. You're there.
Thanks again, Craig.
Thank you.